Welcome back to the channel. We're going over the SP 500, the Nasdaq 100, exactly how we're moving on the market. We have July 4th coming up tomorrow. Have a good weekend with your family. But we need to be talking about exactly how the market's going to be playing out. Is the SP 500 going to continue to crash? Or are we going to start bouncing through the zone and making new local highs? Before we get into that, I have to ask you to consider doing two things: liking and subscribing. I'm posting videos every single day so you get the content you need to be making the trades that are winning every single day, or at least giving you a broad scale of what's happening in the market with news so you're not missing anything, because we have a lot of news to talk about upcoming this week specifically. From that news, we had a really good movement, so we need to talk about it the last time we had it as well. Now we're going to jump right into the S&P, and I'm going to show you what I think is happening over the next week, or at least the next few days, going into some of these key crucial data points. Now, going into the SPY, what's happening here? Now, we've been trading in a few trended areas. Now, for the past 2 weeks, we were getting some upside movement, a week and a half, give or take, back to that 392 area, then brutally dropping from there. We've gone over some of the bad data that was released and points that inflation is still hurting. Inflation is growing worldwide, and it's kind of what's going on and how can we play this in a way to protect ourselves financially in this market, whether you're day trading or long-term trading. Now, what I want to highlight is some of the movement that we had going into the first day of the month actually, but the last day of last week. Going into that, you had some downside to start the day, and then ultimately trended up to about 382. When we looked at some of these sectors that were moving in the stock market, some of the big names, if you will, and just really quick off the top, we're going to go over some of the better performing and then some of the worst performing. The better performing were your big ones, Apple and Microsoft. These were your best performers looking at the market as far as FANG and the big caps inside SPY and Nasdaq. Now, when you look at some of these other names, they look weaker, in my opinion. Looking at Tesla, you held below that daily level and you're kind of just trending sideways. Could you be making a bottom? Most likely, or you're making and getting ready for a next move. You know, similar type of caliber to this type of movement on Tesla. We saw this back here. You saw some sideways movement, and then boom, you got really volatile, pushing back up like crazy. Again, you saw the same type of action way back here, going back into May 25th. We're trending into why that day is so important. But you saw what happened here as well, pushing back up. So I believe you are just getting a little bit of consolidation and you're preparing for a big move. Now, we can also continue to go down this list and look at something like AMD. Again, we've talked about this. We're really getting hurt. This whole sector, NVDA, getting killed. And this whole sector as well, like I'm mentioning, is just getting killed. This is the semiconductor ETF, SOXX. Absolutely getting slapped. Now we can go look at some of the industrial names. Caterpillar. Again, you're basically at where the day opened, but you had a big dip to start the day. John Deere, again, getting hit a little bit better of a hold, but you're still contracting and consolidating down there at those lows as well. So this is what I'm really looking at on the market. And again, I want to point out the most bullish stock that there might be right now is going to be Amazon, to keep it on your radar. Giant head and shoulders going on right now. If it breaks below the neckline of 101, I'd turn into pretty bearish. So if you break below this, you're going to get some pretty nice downside. But as long as this holds up, it's looking for a crazy recovery, most likely to 144, 140-ish, give or a take, just based on some of the price action that's happened here. Conservative targets about 128. But anyways, this is probably the most bullish chart that there is. Now, I've shown you the mixed overall viewpoint on the market. Even with having a great day on SPY, pushing up like that, looking at NQ, what happened here, you pushed up at the end of the day. Even with theoretically tech and the SPY pushing up and the Dow, why are some of these stocks still sitting at these lows right now? Why are they still hurting? And that's the big question going on right now. Now, before I start jumping into any of this, and I will give you my overall viewpoints of what's happening here before, in case you don't want to care about the news, right? What we're looking at, if you break above this key range here, which has held as a resistance locally, you can go back and look at this key range. If you hold above 382.5, in my opinion, you're going to be working your way back up to 389 all the way to 391. This would be target numero uno. This would be where you're aiming to go up here. This has to be your target, okay? Right here, if you break above this range. If you hold below and you start coming back down, in my opinion, you're targeting these lows. You're going to be breaking this overall trend, and you're coming back down to 371.5. This would be my second target on the downside. Again, so this is going to be very clear because you're going to start the week out no matter what, either breaking or pushing down. There's going to be no give or take. You're going to have an immediate direction, right? So if you're looking at this, again, a break above 382.5, holding above it, you're pushing up to locally around 390. You hold below this level, 381. You hold below it. Once again, I'm aiming for a test of 371.5. Conservative, 373, 374, if that's where you want to aim. Now, going over to NQ, before we get into some of that data pools going on there. NQ, a little bit more tricky just because it's futures and the ranges are going to be a little bit broader. Now, looking at this overall, I'm watching this 11.7 area. I have it a little bit too broad, but if you want to really close it down, this is the range you got to be watching right there. So as you zoom in here on Nasdaq, if the Nasdaq futures get above locally 11.7.5, you're aiming for a lot of upside, and I think you could have an immediate touch and an immediate bounce all the way back to locally 12 flat, all the way to 11.95. That's where I'd be targeting in a hurry. Again, you get above this range, you start holding above here, you're targeting that almost immediately. As long as you stay down here, though, I remain bearish. So if you stay below 11.7 and you continue to get rejected here and make lower lows, in my opinion, you're going to continue getting down pressure. And ultimately, we are targeting new lows. You need to recognize how close we are to those local lows as well, because they are right there. You can very much see that you're around 600 points from making those new local lows. And when you got to the lows on Thursday and lows on Friday, you were only about 300 points from getting those low ranges. So we've seen very volatile days. You've seen crazy days of downside. So it can definitely happen if you start to lose momentum here. Big data points. What are we talking about? Now, one, going into Tuesday, you do have the ISM manufacturing data. This has not non-manufacturing. I apologize. We had manufacturing this past week, which came out very poorly, even though they adjusted it to the downside. Very important. This did miss last time. If it gets below 50, that's very bad. So if you're staying above 50 points on these, when it goes manufacturing or non-manufacturing, no matter what, it's still the same overall viewpoint. As long as you're staying above 50, you're considered to be growing as an economy. Now, when you get below 50, you're considered to be contracting. So if this ever gets below 50, it's very dangerous grounds for the consumer and really confirms the idea of quote unquote stagflation in the economy, which would be overall terrible. Now, this is the big one that I'm going to be watching out. You had the Fed minutes coming out on Wednesday. And I want to talk about May 25th because this is the last time we had these Fed minutes. Now, the last time we read these Fed minutes, I broke it down in a video and I kind of went over why I was so concerned and where they were putting their viewpoints. And I remember when we read this last time, they really thought the market was set up to continue to grow and to keep stability. But since this Fed minutes was released, and I'm going to get to it here in a second, they said that GDP can still continue to grow. They don't expect a negative outlook for the next quarter. They think it'll pick back up. They thought this was just hitting us here right now based on Russia and things like that. Now, I've gone over all that in detail. We've actually covered Powell's exact words when he was stating that inflation rose from 1% to over 7% without this whole Russia predicament back in November and December. That was before this became a giant issue, which was in late January, give or take, when this really started to become an issue, and then the actual invasion happened in March. So when we look at this, and in my opinion, I couldn't see how this would come out positive. The Fed meeting minutes, I could not see how this could possibly come out in a positive sense based on their last report anticipating better news to be coming out. But as we look at each data point, more and more terrible news continues to come out. So, just being common sense, I would anticipate, well, how could they be positive on this one if since then they've dropped the rate decision and then they discussed how they don't really know what to expect from inflation based on Powell's broken down words, which we cover here time and time again. This is not just me being biased, but that's my opinion on it. So, but most likely going into these minutes, I won't have a trade open. I'll be reacting to how the market reacts. So if we start to bolster back up and start to mount key levels, and again, I'll just trade to the upside. But as of right now, I would have to anticipate that this does not come out well based on that. But what I want to talk about is what happened here on May 25th, because that's the big day here, right? So we're going to go to SPY really quick because it's going to be easier to show you. And I actually boxed it in for you right here. So if we look here, you can actually see around May 25th right here, near the end of the day, right, you get that Fed minutes coming out right here around 2 o'clock. And you start to shoot up. You start to break these highs, and then for the next 3 days, 1, 2, 3, you go up to these local highs around 416. So you move from locally 395 all the way up to around 415 in a matter of 4 days. Great movement, about a 20-point move on SPY. Really nice and volatile for the first 2 days. Lots of money to be made there. That's why I'm saying going into this, it's just not worthwhile to just hold a trade through it, whereas you'll still have the liquidity most likely to trade this as well. Now, if we come back down to here where we're at, you can also see there's a lot of ranges of no liquidity, right? So in my opinion, if you get above this range around 382, it's almost going to be a straight shot back up to 390 just because there's no key supports, in my opinion, in that range. You can see these major levels where you time and time again, you come below. You get above 392, you know, you're really in business. You might have like a little bit of a double top concern at that point, but getting back all the way up here to 407, 405, there's no real liquidity. You can see all this range where there's no real support or resistance. So that's what I'm watching out there, and that's what I'm going to be looking out for going into this data points. Again, I anticipate, and I couldn't really imagine how they could have a positive outlook here, but I have to go into this with an open mind for your sakes and for mine, because I'm trying to have an unbiased viewpoint here on the channel when it comes to stocks in the market in a broad sense. So when I'm looking at that, that's my concerns there. With NQ, you can come back here and you can also look here. You get a little bit of a zoom out. You know, we're looking, you have quite a bit of range, almost all the way up to about 12.7. We all remember the 12.8, 12.9 range, how big of a resistance that was. But we're not going to really talk until you break above 12.2 or even 12 flat, because that's the key area when you want to get above before you maybe get a double top around 12.2 before you can even make that push back to 12.9. Now, I think you're a long ways out of becoming quote unquote bullish, but there is still a lot of room if you start to move back to the upside, which I will be playing either way depending on the movement, right? So again, until we get above 11.7, I'm very bearish. So if you gap up, you get above 11.7 coming into Tuesday morning, again, hip hip hooray, we're bullish, we're looking for upside. If you stay below this, I'm anticipating a nasty break to the downside and just blood across the market. That's how I would be playing it. Now, some data points we can look at for getting an anticipation of this data. Now, the big one was the dollar, DXY. And again, we've been talking about this one almost every day here on the channel. Now, people were commenting saying you were bearish on the DXY. You ended up dropping, the past 2 weeks. You dropped down to the support zone, and then you bounced and you reclaimed and kind of got a double top going on here. You can see that double top range up here. You're kind of getting that range. Now, if we go back to around the 1 hour, you can also see what's happening here. And this is where, in my opinion, things got interesting. So you held this previous high range that you had back here. You can see this was a previous high range. This was your support. You came down, touch. You're making higher lows as well, which was bullish in my opinion for the dollar. And you're trying to keep going up. So you are still getting bullish pressure on the dollar. The dollar continues to go up, which in my opinion indicates a risk off area. As long as the dollar is going up, in theory, it's risk off on the market. So things like oil and commodities might have a higher value than something like stocks in the next few weeks and days, just because the dollar is going absolutely crazy. That's one thing I'm looking at. So the dollar, in my opinion, continues to look bullish until you get below this level here. If you start to make new lows, then again, you have to look bearish on the dollar. J&K. Now, J&K was a big one. Going back to around March 25th, or May 25th, if you will, you can come back here. This is where you got that data point. You can also see that same pennant that we had here. This is a different type of pattern, in my opinion. This is a bearish pennant, and it looked like you wanted to make more downside. You got an upside break, failed, and then you broke down very hard. Now, the question is are you going to break down here, or are you going to bounce up? I can't give that answer, but looking here, you look kind of bearish. But what we can say is when you got that data point from the Fed minutes back on May 25th, what happened? It shot you up very, very strong when it comes to SPY, when it comes to all this as well. So these are things that I am looking at, and these are things that you have to be playing by ear when it comes to J&K, and it's giving you a very clear answer as well. So J&K, although it does look bearish, we saw what happened on a risk-on environment. When people were willing to put more money in the market, that's why we watch J&K, is to watch if indexes have momentum, because if J&K starts to get momentum, that means investors are willing to risk it on more risky assets such as tech and more more leveraged positions to the upside. So that's what I'd be looking for here. Again, J&K, we got a clear answer on that Fed minutes date, because you were pushing up all the way in 2 Fed minutes, and then boom, you went absolutely crazy. So I'm going to be playing this by ear as well, but as of right now, you've got to fake out on that trend, and you started to push down, and J&K is very close to those lows as well. Looking at something like TLT, safer bonds. These safer bonds, they are moving to the upside. You're seeing a little bit of disconnection from J&K and TLT. Again, going back to around May 25th, you can see right here, you topped off on TLT and you dumped down. So you are pushing up here, which again indicates this is where people are trying to play it with safer when it comes to these type of bonds. They're anticipating that rates may have been topped off here. Again, if inflation continues to rise, we have to anticipate deeper rate hikes and more rate hikes coming on the market closer to a full point if we do not get any reduction in what's happening here. But again, have to play it by ear and watch what's happening. Now, the most concerning part looking at the market was yields. Yields have been dropping quite drastically over the past 3 to 4 days. You saw a pretty nasty drop here. This is one thing you have to start looking at. So we go back to around the 1 week chart. There's going to be a broad sense of what's happened since we had that really big breakout. Now, these are areas that started to really show us that we were getting into a recession or getting into a very turbulent time in the economy, if you will. Going back 40 years on the yields, you can see this trend was finally broken right down here around January. Once you broke that trend, obviously, markets went full bearish. Then you had your 26-year trend coming back down here through about 1996, coming right here, and then boom, you started breaking that. And that's when things started getting volatile even more. So you're still breaking to the upside, but you are getting a little bit of a rejection here. It's worth mentioning, where is that range happening? The rejection is happening at the same area when we were at in 2018, if anyone remembers that drop that we had in the markets back then. So I recommend going and looking at SP500 and see what happens when we topped off there. So it's no surprise that we're getting a little bit of a rejection here, but I do anticipate more upside going back to these local highs of around the 2011 all the way back to 07 range right here. That's where I see yields coming, especially on the 10-year yields. Now, looking at the overall inversion, if you don't know what this means and you're kind of new here on the channel, the inversion is one of the biggest indicators of a recession on the market, right? So if we go back again, if you haven't seen this at all, then just check this out really quick. The dot-com bubble is when yields inverted. The 10-year crossed over the 30-year, and you held for quite a bit, and you crashed pretty drastically for like the next 2-3 years. Housing bubble, 2008, remember that? Yields inverted here. Boom. 2018, yields inverted. Everyone remembers kind of what happens with Trump and how he got consumers are spending more. And there was a few tools we could use in the economy. Right now, there's not that many tools. Now, what we can't see is this is the most drastic rise in yields that we've ever had. You can see this is the fastest yields have ever risen. Go back as far as you want. This is the fastest yields have ever spiked from 0.5 all the way back to a full inversion almost, right? And that's where we're sitting. So going into this right now, we have seen this as well start to drop, right? And this is the big thing we have to look at. So over the past few days, again, we were at over a 1%, a full inversion on the 10 and 30, and you dropped drastically back down to that local range of around a 92% inversion. So we need to start seeing if yields are going to start playing in here, a bounce back anytime soon. And that's what I'm looking for, and I expect from Fed minutes. Again, if you go back down to May 25th, you can see right here, this is where you started to bottom. Again, very big stuff going on here. Going to May 25th, right here, you found your bottom on yields right here on May 25th from the Fed minutes. Although you spiked here and the market spiked with it, it was a very big indicator that the pullback was not over. So we're going to be playing this as well. This is a bit of a lagging indicator. So this will get you into trades and show you what the market's going to do before any of that actually takes place, which is why we've been able to kind of spot this trend so much here on the channel. But that's what I'm looking at here for the week. I'll keep you guys updated. I will have a shorter video coming out tomorrow just on indexes covering how they moved, going into Monday, because they will be open to the rest of the world for everyone to know. But until then, we will see what happens on the broad scale market. America, again, that will not be open. Broad scale markets will be open for other countries around the world. Have a good one, traders.